And staying with energy and commodities, U.S. gasoline use may have peaked this 4th of July weekend. So what does that mean for the best performing commodity so far this year? Mark Gilman of Benchmark is one of the most accurate oil and gas analysts, according to Bloomberg data. And Mark is sitting right next to me here in the studio. Thanks so much for joining us.
Good morning, Betty.
So gas possibly has peaked. Give us a reason why, or the reasons.
Interestingly enough, I think in part it's because it never belonged at this level in the first place, and that finally what we're seeing is the realities of the physical market kicking into play in a meaningful way, on top of what would be, frankly, almost a normal seasonal kind of pattern anyway. Gasoline demand is weak, refinery capacity is strong. And with those two thoughts in mind and an inventory level globally that's right about where it ought to be on a day supply basis, to think that it's going south from here, as far as I'm concerned, is really a pretty easy call.
Well, what's been the cause of the run-up then in gas?
In my mind, it's very, very simple. If you want to understand what happened with respect to gasoline over the last 3-4 months, you don't want to know anything about physical supply, demand, inventory, or any of those fundamental factors. What you want to look at is the paper markets. And up through that entire period, we saw an incredible increase in open NYMEX contract interest in the product markets and gasoline specifically. So that from a shorter-term perspective, it's supply-demand in the paper markets, not the physical markets, that really call the day. That more than any other thing, and it's a reflection of a little bit of wishful thinking in terms of a global economic recovery, is what's at the root of this trend.
So in other words, speculation?
I don't like the word speculation. We like to call it money flows. Perhaps some of it is speculatively oriented, maybe a little bit of wishful thinking, but it was certainly not anything that was justifiable on the basis of fundamental supply and demand.
But not reflecting the reality. Okay, so for American consumers then, does this mean that we will see a drop in prices at the pump?
Well, I think that's virtually inevitable. One just has to understand, though, that the primary driver of prices at the pump is not the crack spread between gasoline and crude, but frankly the price of crude oil itself. In our view, crude's probably about $15 to $20 a barrel above where it belongs, given physical market supply-demand fundamentals. I think the gasoline crack spread, or the refiner margin, as it's termed, on gasoline has probably another $4 or $5 a barrel to drop from this current level. You put the two factors together, and it translates into a 40 to 50 cent per gallon decline in the at-the-pump price, all things being equal, with a little bit of normal lag, which is what we always see in this regard.
And what you were just saying translates into about a $40, $50 range for crude oil then?
In our view, that's where fundamentally crude oil belongs, slightly below what we consider to be the longer-term equilibrium price, reflecting the fact that crude and product inventories globally are very, very high right now.
Now, can we expect a sharp fall then? I mean, given that it sounds like we're headed down that way for crude oil, are we going to see volatile sharp falls, or is it going to be kind of gradual?
Well, Betty, in this business lately, nothing's been mild, so that the odds of it being sharp are probably pretty good. I would point out one other thing, though. What we're likely to see is sharper on the downside than on the upside. And once again, this reflects paper market types of issues, wherein when you see an exit from the money flows that I referred to a moment ago, there's really no other natural side to that trade. What it means is the price must fall more sharply on the downside than the increase on the upside that led to it.
Okay, Mark, great to have you with us. Good for that perspective, and timely, of course. Mark Gilman of Benchmark talking about the gas and also oil markets.